Welcome to your daily solo 401k webinar Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic is S-Corp countdown, the December 31st deadline for full Mega Backdoor Roth flexibility for S-Corp, LLC taxes, and S-Corp. So this is your chance to get answers. Use today's chat to ask questions on today's topic or anything else for that matter. Type them over now so that we can be sure to get to them all. Let's continue here. So of course, before you can even open a solo 401k plan, you first need to make sure you're eligible to open a solo 401k plan. So a solo 401k plan is for owner-only businesses, whether it's a sole proprietorship, S corporation, C corporation, partnership. It needs to be an owner-only business that does not employ any non-owners, W-2 employees who work 1,000 hours or more in your business. So if your business employs someone who's not an owner, and then someone who's a W-2 employee who's also not an owner, and that person works 1,000 hours or more in your business, you would not be eligible to open a solo 401k plan. And you have to apply that test across all of the businesses where you are typically an 80% or more owner. Those are known as the control group regulations / aggregated group regulations, or affiliated service group regulations, I should say. You can always exclude anyone who works under 1,000 hours who's a W-2 employee. Of course, if it's an S corporation, you have to be a W-2 employee, so you would not exclude yourself because you're an owner of the business. So again, that 1,000 hour requirement applies if you are not an owner and you are a W-2 employee who's not an owner in the business. You can also exclude anyone who's under age 21, regardless of how many hours they work. You can always exclude contractors. So if your S corporation employs any contractors, you can always exclude contractors. Your spouse can participate in the plan. He or she does not have to be an owner. As long as your spouse works in the plan, then you can also then he or she can also participate in the plan. So it would just be one plan with both spouses working under the same business, and therefore they would both have separate holding accounts, aka bank or brokerage accounts, under the plan to hold their funds. So eligibility is obviously very important. Now, the December 31st deadline is critical to a certain degree. What does that mean exactly? Well, if you plan to solely utilize the solo 401k plan for making voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth solo 401k strategy, then technically you don't have to open that solo 401k plan by December 31st of 2025, for example. So you technically have until your S corporation business tax return due date plus timely filed extension for that business tax return to both open and fund the solo 401k if you solely want to utilize it for the Mega Backdoor Roth strategy. Now, if you're trying to get it set up by December 31st because you're trying to take advantage of the auto contribution credit, which is a $1,500 tax credit, if you're trying to get that credit to start here in 2025, then that might be one reason to open it. Also, you may not want to procrastinate. Maybe you're going to be busy in 2016, and here in 2025, you still have time. So even though you're not required to open that solo 401k plan by December 31st of tax year 2025, if you solely want to make voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth. It's probably a good idea to just go ahead and open it anyways. But if you listen to this webinar in 2026, it's good to know that you haven't missed the deadline. You technically have until March 15 of 2026, or if you file for a business tax return extension, until September 15 of 2026 to make voluntary after-tax solo 401k contributions for tax year 2025. Now, on a side note, if you're trying to make employee contributions for tax year 2025, you do need to set up that solo 401k plan by December 31st of 2025 to make year 2025 employee contributions. But not if you're going to make employer contributions or voluntary after-tax solo 401k contributions. You have a lot of time still, specifically until March 15 of 2026 or September 15 of 2026 if you file a business tax return extension for that S corporation. Let's take a look at some questions here, and then we'll go ahead and go over this good slide here. I've kind of gone over it already, but it doesn't hurt to continue to go over it. Let's see here. Here's a question here. I have a solo 401k at Fidelity set up by your company for converting pre-tax to Roth. Do I just write a check from the pre-tax account to the Roth account? Then report to your company for 1099-R? I have two real estate and pre-tax solo 401k. How do I convert it to Roth? Do I do an appraisal and start collect rent in Roth IRA account and report in-kind conversion to your company for 1099-R? So please clarify, are you looking to convert pre-tax solo 401k funds to the Roth solo 401k? Or are you looking to convert pre-tax solo 401k funds to a Roth IRA? And if you're planning to convert pre-tax solo 401k funds to a Roth IRA, then you have to meet a certain triggering event. You have to be age 59 and a half or older. If you're trying to convert pre-tax solo 401k funds to a Roth IRA, you have to meet that age requirement. Or if you've transferred IRAs or former employer plans to the solo 401k plan, those can be converted to the Roth solo 401k as well. But if you want to convert any type of pre-tax solo 401k funds to the Roth IRA, those have its own regulations. You typically have to be age 15 and a half or older. So please clarify. Oh, here we go. You're saying you want to convert to the Roth solo 401k. Great. So to answer your question, since you're using Fidelity Investments to hold the solo 401k funds under the non-prototype brokerage accounts, for those who are not familiar, here at my solo 401k financial, we let you choose where you want to hold your solo 401k funds. They can be held at your local bank, or they can be held at Fidelity. So even though Fidelity offers their own solo 401k, they also offer what they refer to as non-prototype company retirement brokerage accounts for a solo 401k offered by my solo 401k financial. So this individual here happens to be using my solo 401k financial for the solo 401k plan and is holding the solo 401k funds at Fidelity Investments under what's referred to as non-prototype investment only company brokerage accounts. So to answer your question, you can actually submit a form to Fidelity to have them move the pre-tax solo 401k funds to the Roth solo 401k holding account. So let me pull up my graph here. Give me a moment here. So you're going to move the funds from this pre-tax solo 401k bucket, aka brokerage account at Fidelity, if you use Fidelity to hold the funds, to this Roth solo 401k bucket / brokerage account. So it's one plan that allows for these various contribution sources. I presume you already have the Roth solo 401k brokerage account open at Fidelity. So you need to make sure you do that if you haven't yet. And we can help you open that up by preparing the applicable forms. But assuming you already have the pre-tax solo 401k and the Roth solo 401k brokerage accounts open, then you can either submit a form directive, and let me share that with you, to Fidelity. Give me a moment here while I pull that form up here. You can submit a form directive to Fidelity, or you can give Fidelity a call, and you can ask them to move the funds over the phone. So yes, Fidelity will move the funds from the pre-tax solo 401k bucket to the Roth solo 401k bucket. They'll even do it for the Mega Backdoor Roth strategies, as we're talking about that today. So if you have voluntary after-tax solo 401k funds in this bucket right here, you can call Fidelity and have those funds moved internally to the Roth solo 401k. Now, voluntary after-tax solo 401k funds can be converted to the Roth solo 401k or the Roth IRA. Those have separate regulations than pre-tax solo 401k conversions. So the question I'm working on answering right now is surrounding converting pre-tax solo 401k funds, not voluntary after-tax solo 401k funds. That's an important distinction. Give me a moment here while I pull up the link I want to share with you. Okay, I'm going to share this link with you, and then I'll continue answering your question. So again, if you're converting your pre-tax solo 401k funds to the Roth solo 401k and you're using Fidelity to hold the funds, I just showed a link from our website that has the entire procedure, including the form that you would submit to Fidelity, or you can give Fidelity a call and have them move the funds over the phone. Now, back to answering the rest of your question. When you convert pre-tax solo 401k funds to the Roth solo 401k, you need to do that by December 31st of 2025 if you want to count that conversion for tax year 2025. And obviously that's important because you might be in a lower tax bracket here in 2025. So oftentimes for a planning opportunity, individuals will process a conversion of pre-tax solo 401k funds to the Roth solo 401k. And of course, that's a taxable event, which might bump you into a higher tax bracket, which may impact other planning. So make sure you consult with your financial advisor, financial planner, as to whether or not you should convert any funds, any pre-tax solo 401k funds in 2025. But if you are, you need to make sure those funds are moved, converted from the pre-tax solo 401k bucket to the Roth solo 401k bucket by December 31st. If you're processing a Mega Backdoor Roth conversion, there's no rush to do that. Why? Because it's not going to be a taxable event. When you convert voluntary after-tax solo 401k funds to the Roth solo 401k, whether you convert those in 2025 or in 2026, it doesn't matter because it's not going to impact your ability to process another conversion in 2026, nor is it going to impact your income because those are voluntary after-tax funds, meaning that they've already been taxed. They were taxed when you made the contributions. Now, if you're converting real estate, to finish answering your question here, well, let me finish answering the second part of that question. So a Form 1099-R gets issued for that conversion of pre-tax funds to the Roth solo 401k. So pre-tax solo 401k funds to the Roth solo 401k. So make sure to complete our online conversion form so that we collect the necessary information to issue that Form 1099-R. Let me share a tab from our website, the Forms tab. And as long as you submit that form to us on a timely basis, we'll issue that Form 1099-R, a copy to you and a copy to the IRS. Keep in mind that here in my solo 401k financial, we don't have access to your funds. And we also will perform reporting for your plan as long as you communicate to us that you want that reporting. So for example, as I've been talking about already, if a Form 1099-R needs to be issued, which would apply if you take a required minimum distribution, You process a conversion of pre-tax solo 401k funds or voluntary after-tax solo 401k funds. You take a qualified distribution, a hardship distribution. You transfer a partial funds from the solo 401k to an IRA, for example. Those are all reportable events on a Form 1099-R. So if you want us to help you with that Form 1099-R, one, we're not going to charge you additional fees. That's covered in our fee, our annual fee. But you need to timely request it. It'll be covered in the annual fee as long as you timely request it. We're very popular for solo 401k plans with institutional clients, retail clients, because we let you choose where to hold your money at. At the end of the day, it's your money, so you should choose where to hold it at. But that comes with responsibilities. You need to let us know to help you. We can't help you if you don't communicate with us and let us know that, hey, I process a conversion. Please let me know. Or Form 5500 easy reporting. That's another return that we'll prepare for you at no additional cost as long as you timely request it. That Form 5500 easy applies once the market value of that solo 401k plan is greater than $250,000 as of the end of the plan year. And you have to add up all the funds in your plan, including all investments. So here's an example of a two-participant plan where both spouses are self-employed in the same business. So they both participate in one plan. For Form 5500 easy reporting purposes, you have to add the value in all of these holding accounts, all the investments like real estate, precious metals, tax liens, crypto, you name it. That's all part of the plan. So you have to add up all those buckets to determine whether or not the market value of your solo 401k plan is greater than $250,000 as at the end of the plan year. For example, if the total market value of your solo 401k plan is going to be greater than $250,000 as of December 31st of 2025, a Form 5500 easy needs to be filed with the government by July 31st of 2026. So if you want us to help you with that, make sure you timely request it. Okay, so let's finish answering your nice long question here. So if your plan holds real estate, physical real estate, rental properties, or even private equity or private placements, any type of alternative investment, you have to get a valuation, especially if that's held in the pre-tax solo 401k bucket, because if you convert that asset, in this case real estate, that's going to be a taxable event. You're going to have to pay Uncle Sam taxes on that. When I say you, I'm talking you, not your solo 401k. The taxes due on that conversion has to be paid with funds outside the plan. You can't use solo 401k funds to pay that. So for example, if that property value is $100,000, you're going to have to pay the taxes due on that conversion to the IRS by your business tax, by your personal Form 1040 tax return due date next year. Now, you may have to pay estimated taxes, quarterly estimated taxes, so that's going to impact that as well. But you have to pay the taxes due on that conversion with outside funds. You can't use business funds. You can't use 401k funds. You have to use personal funds. And the market value, you got to make sure you obtain a valuation from a third-party appraiser. You can't perform that valuation. And that's something very important, because if you get audited, that's the first thing the IRS is going to ask for regarding the conversion of those pre-tax funds to the Roth Solo 401k is a copy of that appraisal, the market valuation. So you have to get that property appraised, and then after that, you convert it from the pre-tax Solo 401k to the Roth Solo 401k. And let me pull up a link from our website here to share with you regarding converting an in-kind asset. So obviously, anytime you process any type of conversion of pre-tax funds in a solo 401k, whether funds, whether stocks, whether real estate, it's obviously best to convert those assets in years that asset is low in value, so that way you don't have to pay as much taxes. and then all the growth will be realized inside the Roth Solo 401k. Here's a link from our website regarding the rules when you convert real estate held in the pre-tax Solo 401k to the Roth Solo 401k. If you go to our website, we have a search box at the top right-hand corner. You just need to type keywords in there and you'll bring up all kinds of information and you can read more, but there's a link to that. Okay, we'll come back here and take a look at some more questions here. Go ahead and type them over and we'll go over those. But let's continue with our topic for today, which is the S-Corp countdown, 12/31 deadline for full Mega Backdoor Roth Solo 401k flexibility. So, get back to my slides over here. So we've talked about how you still have plenty of time to open the Solo 401k for tax year 2025 if your sole purpose or your sole goal is to utilize the Solo 401k plan for the Mega Backdoor Roth strategy. So here's a good slide here about specific S-Corp timeline for deadlines. So by December 31st of 2025, that's when you want to open the Solo 401k plan if you want to make employee contributions. But if you want to make employer contributions, known as profit sharing contributions, or voluntary after-tax Solo 401k contributions, as part of the Mega Backdoor Roth strategy, you have plenty of time. You have until March, actually you got an extra day. You've got till March 16 of 2026. Or if you file a business tax return extension for that S-Corp, you have until September 15 of 2026 to both open and make the contributions for the voluntary after-tax. That's voluntary after-tax Solo 401k contributions. So the only thing that you're going to lose by waiting to open the Solo 401k plan until March 16 of 2026 or September 15 of 2026 is not being able to make employee contributions. So if you want to make employee contributions, make sure you set up the plan by December 31st of tax year 2025. Otherwise, you won't be able to make contributions for tax year 2025, but you will be able to make employer and voluntary after-tax Solo 401k contributions as long as you open and fund the plan in 2026 by March 16 or by September 15 of 2026. So what does establishing a Solo 401k actually mean? Well, it's actually quite simple. Number one, a Solo 401k plan is a retirement trust. All 401k plans and even IRAs for that matter are retirement trusts. So it's the actual documents, the underlying Solo 401k plan documents that determine when the plan is effective. Yes, you heard that right. It's not when you make the contribution, when you open up the holding accounts, when you obtain the EIN number for the Solo 401k. It's when you sign the actual underlying legal documents, the plan documents such as the adoption agreement. So with a provider like my Solo 401k Financial, you can sign up online with us. We'll prepare those documents typically the same day. I should always say the same day, not typically. We'll prepare in the same business day. And as soon as you sign those documents, your plan is effective. So that's all you have to do to meet the December 31st Solo 401k deadline, or even the March 15 or September 15 deadline. So what do you need to do by December 31st? Nothing. If all you want to do is utilize the Solo 401k for the Mega Backdoor Roth strategy. But if you want to utilize it for employee contributions, then you need to sign those Solo 401k plan documents by December 31st. And then you can wait to open up the bank and or brokerage accounts for the Solo 401k next year in 2026. Same thing with making contributions. You have until your business tax return due date plus timely filed extension. That applies to all contribution types: employee, employer, and voluntary after tax. The solo 401k, as I mentioned already, is a retirement trust, so it's going to have its own separate employer identification number. No, you do not use your social. No, you do not use your business EIN. If I got a penny, well, I know we're getting rid of pennies, but if I got a nickel for every time I get that question about, can I use my business EIN for the solo 401k, I would be a billionaire. So no, you cannot use the EIN number for your business for the solo 401k. Why? Because a solo 401k is a retirement trust. It's going to have its own separate bank account or brokerage accounts. When those bank or brokerage accounts are open, they're opened up using the EIN number for the solo 401k. Likewise, when we perform the reporting for that Mega Backdoor Roth strategy, the conversion on that form 1099-R, we don't use your business EIN because it's not your business that's processing the Mega Backdoor Roth conversion, it's your 401k. So imagine putting your EIN number for your business on that 1099-R. That's going to confuse Uncle Sam. You're probably going to get audited. So you need to use the EIN number for both opening the solo 401k bank account or brokerage accounts, as well as for reporting on the form 1099-R for the Mega Backdoor Roth conversion. The EIN number for the solo 401k is used. Well, good news. That EIN number doesn't have to be obtained now if you're trying to meet the December 31st deadline. That can be obtained next year in 2026 when you're ready to open up the bank or brokerage accounts, which can also be opened up then. All you need to do by December 31st is sign the plan documents. Okay, before we continue here, let's take a look at some questions here. Now, if this information is helping you to feel more confident about your future, please take 1 second to like and subscribe. It tells the platform this content is valuable, which helps other solopreneurs like you to find it. Subscribing guarantees you get notifications of all the crucial content we deliver every day to help secure your retirement. Got a question here. I'm a single member LLC, taxes and S-Corp. I plan on doing looks like the question got cut off there. Where's the rest of your question at here? Give me a moment here. Here it is. You plan on doing a cash balance plan for 2025 and a solo 401k. What is the deadline to set up a cash balance plan and fund for 2025? That's a good question. You've actually stumped me on that one. I usually don't get stumped. We don't offer cash balance plans, so that might be why I don't know the deadline for the cash balance plan setup. But if you send us an email to info@mysolo401k.net, I'll look that up and I'll follow up with you. So I don't know what the deadline is, but I can tell you that many of our clients do make contributions to both a cash balance plan, aka defined benefit plan, as well as a solo 401k. Let me share a page from our website actually that talks about contributing to both a solo 401k and a defined benefit plan. That's oftentimes referred to as a DBK. But here's the link to that. But yeah, I can tell you from a contribution perspective that you can contribute to both a cash balance plan, aka a defined benefit plan, and a solo 401k. So a defined benefit plan only consists of employer contributions, whereas a solo 401k plan allows for employer contributions, voluntary after-tax contributions, as well as employee contributions. So even if you maximize your employer contributions to your cash balance plan, you're still going to be able to make a 6% employer contribution to the solo 401k, and you're also going to be able to make an employee contribution of $23,500 to the solo 401k plan for tax year 2025. And you can even make a catch-up contribution if you're age 50 or older of $7,500. Or if you're age 60, 61, 62, or 63, you can make a super catch-up contribution of $11,250. So that's why a lot of our clients will have both a solo 401k plan and a defined benefit plan. We do have a company that we refer a lot of our cash balance defined benefit plan inquiries to, so we can also refer you to that company. But yeah, you can also utilize the Mega Backdoor Roth strategy even if you have a cash balance plan. And you can contribute a total of $70,000 as part of the Mega Backdoor Roth Solo 401k for tax year 2025 on top of your defined benefit cash balance plan contributions. So talk about really supercharging your retirement savings using both a cash balance plan and a solo 401k plan. Okay, looks like we might have some more questions here. Give me a moment here. Here's a question here. I do have an existing solo 401k plan accounts. Is it possible to change plan and bring it under my solo 401k? I'm looking for the Mega Backdoor Roth conversion. Certainly. We process that's known as a restatement, where you move a solo 401k from one provider to the other provider. We process probably, I don't know, maybe 15 to 20 of those a week. And we process a lot of those from companies like Fidelity and Schwab, where you might have a solo 401k. I know that this morning we processed one for a client that has a solo 401k at T. Rowe Price. We also restate a lot of them from a census. A lot of them are at census, and a lot of solo 401k plans, especially stemming from Vanguard, when Vanguard used to offer solo 401k plans. And I know that there has been a couple solo 401k plan providers in the industry that either closed their doors or sold their business or went bankrupt. And we get a lot of those clients come over to us. So certainly, and we have specific information on how to do it from each entity. So if you have a solo 401k at Fidelity that you want to restate to our plan, we have a specific procedure we follow. We'll shepherd you through that. Same thing with Schwab or other providers. So good question. You would also, when you complete our online application to open the solo 401k to restate that existing one to our plan, we're going to ask for the original effective date of that existing plan, known as the original plan effective date. We need to populate that date on the new solo 401k plan documents so that the plan carries over its history. So we need to get that date. You can obtain that original plan effective date from that existing plan by reviewing that plan's existing adoption agreement. Okay. Here's a question here. What is the deadline as a single employee S-Corp to set up a solo 401k and fund the 401k, such as employee pre-tax, employer profit share, and employee after tax that we will convert to the Roth 401k? So good question. I think I answered this question already in great detail, especially under this slide right here, but I'll be happy to summarize it again. So here we are. This is a good slide to take a look at. So if you're trying to set up the plan so that you can make employee and employer contributions for tax year 2025, then you're going to need to set up the solo 401k plan by December 31st of 2025 for your S corporation self-employed business or C corporation business, whether it's S corp or C corp. You got to set it up by December 31st if you want to be able to make employee contributions, not necessarily employer contributions. So Secure Act 2.0 kind of muddied up the waters a little bit, but not to get too much in the weeds here. If your business is taxed as an S corp or a C corp, and you want to be able to make employee contributions for tax year 2025, you need to set up the plan by December 31st of 2025. And setting up the plan means you need to sign the documents. You can always open up the bank accounts or brokerage accounts next year in 2026 to make those employee contributions. You just need to sign the documents by December 31st, the solo 401k plan documents that we draft the same day. If you want to make employer contributions in your business as an S corporation, you have until March 15 of 2026 to open that plan and make that contribution. Or if you file for a business tax return extension, you have until September 15 of 2026 to both open the plan and make those employer contributions. Those same rules apply to voluntary after-tax solo 401k contributions, those same employer deadlines. So you can wait, so you can open the plan now, or you would need to open it by March 15 or by September 15 of 2026 to make voluntary after-tax solo 401k contributions for tax year 2025. Okay. Let's see here. Let's take a look at some more. We're going to go over some more slides here, and then we'll take a look at some more questions here. So let's talk about the Mega Backdoor Roth, since that's today's topic, is the S-Corp countdown for full Mega Backdoor Roth flexibility. So the Mega Backdoor Roth Solo 401k consists of making voluntary after-tax solo 401k contributions. So that's a way so the Mega Backdoor Roth strategy is a way to get more Roth funds into your solo 401k indirectly. Not all solo 401k providers offer the Mega Backdoor Roth strategy. For example, Fidelity doesn't, Schwab doesn't, T. Rowe Price doesn't, but both Schwab and Fidelity will provide brokerage accounts known as company retirement brokerage accounts for solo 401k plans offered by my solo 401k financial. So don't confuse that. So even though Fidelity and Schwab offer their own solo 401k, they will also provide brokerage accounts for plans offered by my solo 401k financial for the Mega Backdoor Roth strategy. So when I touched on this earlier, with a solo 401k, you've got separate buckets for each source of funds. Here's an example of a one participant plan. So the S corporation sponsors the solo 401k plan. Under that solo 401k plan, you have separate holding accounts. You've got a pre-tax brokerage account or bank account, a Roth solo 401k bank or brokerage account, and a voluntary after-tax solo 401k bank or brokerage account. Those are known as the holding accounts. So it's considered just one plan that allows for these various contributions. You don't have to make all these contribution types. You can choose to solely make voluntary after-tax solo 401k contributions, and then you can convert that voluntary after-tax solo 401k contribution to the Roth solo 401k or to the Roth IRA. Then we'll report that conversion to the IRS on a Form 1099-R. So you need to complete our online conversion form so that we collect the necessary information to issue that Form 1099-R to the IRS to report that Mega Backdoor Roth conversion. So that's how the Mega Backdoor Roth strategy works. Now, contributions to a solo 401k plan, whether employee, employer, or voluntary after-tax solo 401k contributions, as part of the Mega Backdoor Roth strategy, those are going to be based on your W-2 wages from your self-employed business. So you have to have W-2 wages from your self-employed S corporation in order to make contributions to the solo 401k plan. You also cannot contribute more than you make. So if you don't make enough, you're not going to be able to maximize your contributions to the solo 401k. You also cannot make contributions to the solo 401k based on your W-2 wages from your daytime job. It has to be based on W-2 wages from your S corporation. So contributions to a solo 401k plan are always based on your earned income from self-employment activity. And depending on how your self-employed business is taxed, that's going to determine where your self-employment income is reported for solo 401k contribution purposes. Here's a good slide here that talks about sole proprietorships and partnerships, because those type of businesses can also sponsor a solo 401k. For an S-Corp, you're going to see here that you got to use box 1 of your W-2, the gross wages, for the solo 401k contribution calculation. So if your business is taxed as an S-Corporation, you want to make any type of contribution to the solo 401k, for example, a voluntary after-tax solo 401k contribution as part of the Mega Backdoor Roth, you're going to look at box 1 of your W-2, the gross wages. You may also need to add to that box 1 any amount listed in box 12A. You want to make sure you add that amount to box 1 of your W-2 wages. And that amount there is going to be used for calculating your contributions. For example, if you pay yourself at least $70,000 of box 1 W-2 wages, you can contribute that entire $70,000 to the voluntary after-tax solo 401k and then convert it to the Roth solo 401k or the Roth IRA. So that's what makes the voluntary after-tax solo 401k contribution so popular. It's a dollar for dollar calculation based on your W-2 wages. It's not a percentage calculation like the employer profit sharing contribution, which is a 25% calculation. But the voluntary after-tax contribution says it's a dollar for dollar contribution. And if you want to maximize your overall 415 limit contribution to the solo 401k, for tax year 2025, you simply need to pay yourself $70,000. When I say simply, I mean you don't need to pay yourself any more than $70,000. And if you pay yourself any more than $70,000, you're not going to be able to treat that for the Mega Backdoor Roth strategy. Because the Mega Backdoor Roth strategy, which again consists of making voluntary after-tax solo 401k contributions, you can now go over that 415 limit, which is $70,000 for tax year 2025. So you can never make any type of catch-up or super catch-up contribution as a voluntary after-tax solo 401k contribution. Those would get deposited to the Roth solo 401k directly. And if you're trying to make catch-up contributions, you're going to have to pay yourself more than $70,000. Catch-up contributions and super catch-up contributions are also a dollar for dollar calculation. So if you're age 50 or older and you want to make a normal catch-up contribution of $7,500, in addition to that $70,000 voluntary after-tax solo 401k contribution, you would need to pay yourself a total of $77,500. The $70,000 would flow to the voluntary after-tax solo 401k bucket, and it would then get converted to the Roth solo 401k. The $7,500 catch-up contribution would get applied to the Roth solo 401k bucket. Okay, let's see here. Get back to my slide. Give me a moment here and we'll take a look at some more questions as well. So here's the slide here that we were just discussing. So as the slide here talks about, you can put 100% of your W-2 wages as a voluntary after-tax solo 401k contribution. What's great about voluntary after-tax solo 401k contributions for high income earners is that even if you maximize the contributions to your daytime job 401k, so let's say you work for Amazon and you're a full-time employer at Amazon, or you're a full-time employee, and you max out all your contributions to the Amazon 401k. If you also have a side business, you can open a solo 401k for your side business. Let's say it's an S corporation. Let's say you want to maximize the Mega Backdoor Roth strategy. If you pay yourself at least $70,000 of W-2 wages from that self-employed S corporation, you can contribute that entire $70,000 to the solo 401k. the voluntary after-tax solo 401k bucket, and then convert it to the Roth IRA or the Roth solo 401k, even if you maximize your Amazon daytime job 401k contributions. Now that only applies if you participate in the daytime employer 401k as well. If it's a 403b daytime employer if it's a 403b daytime employer plan because you're a doctor or a teacher, then you wouldn't be able to also do the Mega Backdoor Roth strategy if you've already maximized all your contributions to that 403b. So it works if it's a full-time employer 401k, not if it's a full-time employer 403b plan. So here are some common pitfalls to avoid. So we talked about your 23,500 employee contribution limit is shared across all 401k plans, but it's not shared across 457 plans, but it is shared across 403bs and full-time employer 401ks. But the Mega Backdoor Roth is not shared among all 401k plans, as I just touched on, using that Amazon 401k example. And make sure that when you're making contributions to the solo 401k for your business taxes and S corporation or even a C corporation, you have to base the calculations on your W-2 wages from your business, not your daytime job. All right, let's see here. Let's take a look at some questions here, and then we'll pick back up here. So we have just looking for some questions here. Here's a question here from Mike. Can you do a SIP IRA, a solo 401k, and a cash balance plan for the year for a single member LLC? Good question. So yes, you can, and I touched on this earlier about how you can have both a cash balance plan, also known as a defined benefit plan, as well as a solo 401k at the same time. I also explained the contribution rules for that. As far as the SIP IRA, yes, you can have a SIP IRA as well. However, you have to aggregate your SIP contributions with your solo 401k contributions. Keep in mind that a SIP IRA only allows for employer contributions, whereas a solo 401k allows for both employee and employer contributions. So you have to aggregate those contributions. We've actually performed many webinars on comparing the SIP IRA versus the solo 401k. Let me see if I can dig one up here and share it with you here. But if you visit our YouTube channel where we have over 1,000 videos, you can pull up some good videos we've done on that comparison. I just share a link with you from our website where we compared the SIP IRA versus the solo 401k. SIP IRAs are not as popular anymore because SIP IRAs only allow for employer contributions, whereas a solo 401k allows for both employer contributions and employee contributions. So why have a SIP IRA if you can just do both through the solo 401k plan? So take a look at that. Let's see here. I think I went over that already. Went over this already. Went over that. Who do you refer for cash balance plans? I can't think of the name of the company right now, but if you send us an email to info@mysolo401k.net, we'll send you that contact information. I know the person's name is Tally. They are located here in San Diego, California, which is where I'm located at. Give me a moment here. Do you have anyone who helped set up a trust? If you're talking about a living trust for if you want to name your living trust as the beneficiary of the solo 401k, send us an email. We can refer you to someone. Let's see. Here's a question here. Can business owner roll over funds into solo 401k from another retirement plan like a thrift savings plan? Great question. Yes. Those military thrift savings plans. We have a lot of clients, especially since we're located here in San Diego. There's a lot of military folk here. You can certainly transfer your thrift savings plan to a solo 401k plan. We help clients do that all the time. We'll fill out that TSP transfer form for you, whether it consists of Roth funds inside that TSP or pre-tax funds or even after-tax funds. We find some of those thrift savings plans even have after-tax funds. Those could be transferred over to the solo 401k. So certainly, you can transfer IRAs, former employer plans. The only type of funds that cannot be transferred to a solo 401k is a Roth IRA, and that's a Roth IRA restriction. You can never transfer a Roth IRA to the solo 401k. You can if you have a non-deductible IRA and you're trying to isolate those non-deductible IRA funds as part of the backdoor Roth strategy. So not the Mega Backdoor Roth strategy, but the backdoor Roth strategy that applies to IRAs. You can also transfer your gains and that non-deductible IRA. You can transfer those gains to the solo 401k, and then you can convert the bases in that non-deductible IRA to the Roth IRA. So that way it won't be a taxable event. We've actually performed a webinar on that topic before. Give me a moment here. Okay. Looks like those are all the questions for now. Let's get back to this, our next slide here. So we talked about this slide already. Revocable or irrevocable trust? Yeah, we can provide you with a contact that can draft revocable or irrevocable trusts for you. No problem. If you try to name the revocable or irrevocable trust as a beneficiary of your solo 401k, not everybody likes to name their trust as the beneficiary of their solo 401k, especially if you are married. Oftentimes I see it named as the secondary beneficiary, not the primary beneficiary. And that's if you want to exercise control from your grave. If you have children, for example, and you're afraid that if they inherit your solo 401k funds, you're going to go out there and buy an expensive car or blow it on gambling, then oftentimes we'll see the trust named as the beneficiary of the solo 401k. All right, let's keep going here with some more slides here. So we've already talked about this already as far as contribution amounts for tax year 2025. So I'm not going to go over this again. So common mistakes to avoid when you're trying to meet the deadline for the full Mega Backdoor Roth flexibility. Waiting too late to open the solo 401k plan. That's why we're doing this webinar here the day after Thanksgiving, so Black Friday of tax year 2025. So you still have plenty of time to open the solo 401k plan for tax year 2025. So why procrastinate? Even though you can wait till September 15 of 2026, if all you're going to do is utilize the Mega Backdoor Roth strategy, why wait? But of course, if you're listening to this webinar after January 1st of 2026, it's good to know you have time. You have until September 15 of 2026 to both open and fund that solo 401k for your S corporation self-employed business if you file the timely tax return extension, if you want to utilize the Mega Backdoor Roth strategy for tax year 2025. Make sure you pay yourself enough W-2 wages for tax year 2025 if you're trying to maximize your Mega Backdoor Roth strategy up to the overall limit of $70,000. You can't contribute more than that as the voluntary after-tax contribution to the solo 401k for tax year 2025. That's the maximum. So you want to make sure you have enough W-2 wages to support that, which would be $70,000 of box one, W-2 wages, and make sure you use a solo 401k provider that provides a solo 401k plan that allows for the Mega Backdoor Roth strategy. The last thing you want to do is open the plan up thinking it allows for, and then when you go to perform that strategy, You find out too late that, oh, wait a minute, my plan doesn't allow for it. Well, here at my solo 401k financial, we draft the plan documents automatically to allow for the Mega Backdoor Roth strategy, so you don't have to worry about that. Check that off your list. Okay. So here at my solo 401k financial, will help you set up the plan. You have an online application that you would complete. That's how we collect the necessary information to draft the plan documents. We then help you open up the holding accounts for the plan, whether at Fidelity, Schwab, your local bank, credit union, you get to choose. It's your money, you get to choose. And then we'll guide you on how to get everything reported with regards to reporting contributions, making contributions, calculating contributions. We do those every day. Typically by email is the best way to handle it, so we can outline it for you. You can have it right there at your fingertips to share with your financial advisor, your attorney, and so forth, your tax professional. We went over this already. Let's see if we have any more questions here. Here's a question. If I do a SIP IRA and 401k with cash balance plan, does the employer contribution limit 6% for SIP IRA and 401k? Yes, it does. That 6% applies across the board to the SIP and the solo 401k. Good question. Can business owners or spouse take loans from the solo 401k? Certainly. Here at my solo 401k financial, we draft the solo 401k plan for the maximum flexibility under the law. In other words, we draft it with all the bells and whistles. You don't have to blow every whistle, honk every horn, but it's there. So yes, it allows for solo 401k participant loans. Each spouse can borrow 50% of their respective solo 401k balance in the plan, up to $50,000. So if both spouses have enough funds in that solo 401k plan, they can each borrow a total of $50,000 from the solo 401k for a combined total of $100,000. We'll draft the plan loan documents. That's all covered in our pricing. It'll consist of a payment schedule and the loan note. Those have to be drafted under the IRS regulations. You can't just draft it on a napkin or a sheet of paper. The loans will be paid back monthly or quarterly, consisting of principal and interest. Typically, it's the prime rate plus 1%. It's a fixed interest rate. The typical loan term is 5 years. Unless you use the proceeds towards the purchase of your primary residence, then it can be extended to 15, 30 years. Okay, let's see here. How long does it take to set up a solo 401k? It takes 1 day. Remember, under the IRS regulations, all you have to do is sign the plan documents, which we'll provide in 1 day. As soon as you sign those documents, you've met the deadline. Then after that, we can help you open up the bank or brokerage accounts, depending on where you want to hold the money at. Good question. I transfer money from traditional IRA to my solo 401k. Do I need to request a form? No. So remember, if you transfer money from the solo 401k to an IRA, or you process a conversion of pre-tax solo 401k funds to the Roth solo 401k, or voluntary after-tax solo 401k funds to the Roth IRA or Roth solo 401k, that results in having an issue of Form 1099-R. When you transfer funds from an IRA to the solo 401k, the IRA custodian issues the Form 1099-R. So you want to make sure the IRA custodian issues that Form 1099-R. Also, make sure that if you move funds from an IRA to a solo 401k, reach out to us and we'll draft that transfer form. So it's done as a non-taxable direct rollover. Don't do it as a 60-day rollover or as a distribution, because then you're going to have to send a letter to the IRS along with your Form 1040, explaining that it was a 60-day rollover as opposed to a direct rollover. Direct rollover means that the check was made payable in the name of the solo 401k. You as the trustee then deposited that check to the solo 401k. A 60-day rollover is where you have the IRA custodian issue a check just in your name. And then you put those funds in your personal account, and then you have 60 days to put it into the solo 401k. You typically don't want to do it that way. Puts more work on your plate, because if it's done as a distribution, 60-day rollover distribution, where the check is issued in your name or the funds are wired to your personal bank account, the IRA custodian is going to use a code 1 or a code 7, depending on your age, and box 7 of that Form 1099-R, which tells the IRS that it's a taxable distribution. Whereas if you have it done as a direct rollover, where you have the check issued in the name of the solo 401k, the IRA custodian is going to use a letter G as in George on that Form 1099-R. That tells the IRS that the transfer, the movement of that IRA was done as a non-taxable event. So the IRS gets nervous anytime they see money leave an IRA that doesn't have a code 1 or a code 7 and box 7, or excuse me, that doesn't have a code G and box 7, but instead it has a code 1 or 7. That's going to result in getting a letter from the IRS typically a couple years later after you move those funds over. So don't do it that way. Do it as a direct rollover. But to finish answering your question, your IRA custodian would issue the Form 1099-R because they're the ones that release the funds. If funds were going from the solo 401k to the IRA, then yes, we would issue that Form 1099-R upon your timely request. All right. Can SIP IRA funds be transferred to a solo 401k? Certainly. We help clients transfer SIP IRAs to the solo 401k all the time. The only thing that cannot be transferred to a solo 401k with respect to an IRA is a Roth IRA or bases in a non-deductible IRA, but the gains in the non-deductible IRA can be transferred to the solo 401k. I pay my kids for part-time work in my business. I pay them on a W-2. Or do I pay them on a W-2 or 1099? They are 16 and 18, and they work less than 200 hours each. So number one, you can always exclude anyone who's under age 21 from participating in the plan, regardless of how many hours they work. So by that virtue, you don't have to worry about your kids working in your business from a solo 401k perspective. Now, from a planning perspective, once your kids reach age 21, and if he or if one of them or both of them work 1,000 hours or more in your business, you're not going to be able to continue with the solo 401k plan. Or if they work in your business once they reach age 21 for 2 consecutive 12-month periods where they work between 500 and 999 hours, that's going to result in you no longer qualifying for the solo 401k plan. So option A would be to make your kids owners in your business. So in your S corporation, they would need to be each would need to be at least a 3% or more owner in your business. And then they could participate in the solo 401k plan, and you can continue with the solo 401k plan because the solo 401k is for owner-only businesses, owner-only employees. So your kids, once they reach age 21, will have to be a 3% or more owner in your business if you want to continue with the plan. They don't have to contribute, but they can once they reach age 21 and they meet that requirement. I was going to share a link, but I can't remember what link that was. Okay, I think we've come to the end of our session here. We've been on here for well over an hour. So that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please subscribe so we can keep building this community. We'll be back here again in a couple hours with more crucial content. Until next time, have a good rest of the day.